Once you get physical, there's a finite supply. When you're intangible, there's an infinite supply. Silver is severely undervalued. And this is what I personally use as my primary tool of barter.
If you're considering investing in precious metals, gold and silver are the two obvious choices. Precious metals add a lot of diversification to the portfolio and are also an excellent hedge against inflation. While gold is often the precious metal of choice, investing in silver is also gaining popularity. Even though you know that gold is significantly more expensive than silver, what you may not know is that the price of silver is also more volatile. A lower cost of silver means that a relatively small amount of silver is needed to create a significant impact on silver prices. In the comparison of gold and silver, the price of gold is not that volatile. This makes gold an ideal investment even for shorter investment periods. In today's video, we'll tell you why Lynette Zang believes silver is undervalued and how we can take advantage of it. But before we get into the video, make sure you subscribe to our channel and press that bell icon to never miss an update. We are running out of time fast, and it should be very, very obvious to everyone now that what we have been talking about for years and years and years is coming to pass. The Fed now openly says that they will fight inflation by weakening the labor market because we shouldn't let workers demand more money because of inflation. They're the ones who create it. It's the public that suffers the most in these periods of time, and therefore they have a small advantage. We believe that price stability means that the prices of goods and services remains the same. Actually, price stability means that inflation is low enough that workers don't ask for a raise. The Fed is going to try to fight that inflation to stop some companies from laying off more people, which is what we're seeing happening in the tech industry, especially lots and in the real estate industry, in particular tech and real estate. Two very hot areas now have been cooling down and they've been laying off a lot of people. We are a consumer-driven economy, and that's not just true in the United States. China has tried to transition to a consumer-driven economy, and the consumer has carried the weight of the world on their shoulders. But that's changing because there's only a limited amount of consumption that one can do. Unlike governments, where there are no limits to the amount of debt that they can take on, especially when their central bank buys it. And what we see is that the supply of silver is shrinking and the demand is about to boom. We saw what happened in February 2020, and we saw ETFs and other SLVs change their perspective. So it's not based on actually holding physical silver because there's a limited supply, whether it's gold or silver or oil or whatever. Silver is severely undervalued. People say that silver is more undervalued than gold. Maybe it is, maybe it isn't, but silver is a secondary metal that will be affected by the global growth or decline in growth. Compared to gold, silver is a less dense metal. In fact, if you buy pure silver, its volume is about 80% higher than that of gold. This means that investing in physical silver will also require you to have more storage space. The solar industry is a well-known consumer of silver and has grown significantly over the last decade. In turn, demand for silver from this segment has also increased. In 2021, the PV sector accounted for 10% of all silver consumption, up from 5% in 2010, more than a decade earlier. This trend is expected to continue as more countries green their economies and energy prices remain high. That's all for today. Let us know your views in the comment section below, and don't forget to like this video before leaving. Thanks for watching.